Hey, Bowtie Nation, Joseph Hogue here. Thank you for joining me for another one of these Beer Money Sundays. I've got mine. Hope you got yours wherever you're coming at to us from the nation out there, adult beverage or otherwise. If you want to, watch with a cup of coffee rather than your favorite adult beverage, go ahead and do that too. But we've got a great video for you today because I love talking about these long-term trends, and that's really what we're talking about today with these investments that will never let you down, will not let you down. My five highest conviction investments, my five highest conviction stocks and investments, and the reason why I want to talk about this is because we talk a lot about those shorter term trends and have really done really well with spotting that shift in the markets from the tech to the cyclicals in November. If you've been following the Bowtie Nation portfolio, there we shifted to financials, to energy, to some of those cyclical and reflation stocks back in November, and have done really well. We've beaten the market so far by 25%. Overall portfolio return on that is about 35%, and it's because we were able to spot that short-term trend, the shift in the markets from the tech stocks, the growth stocks that worked last year, into the cyclicals that are working this year. But some of the best investing I've ever done has been on the longer term trend. And it's really because it's much easier to predict, to forecast those longer term, those big ideas, universal themes that can get behind certain stocks, right? You can go into that with a high degree of confidence that things like artificial intelligence, that digitization and self-driving, those big trends that are going to happen over the next decade, you've got that higher confidence that those are going to play out and that they're really going to be a driving force behind a whole group of stocks, right? And so that you can really invest early in those groups of stocks, have a high degree of confidence that it's going to win out and it's going to provide market beating returns, right? So I wanted to share my five highest conviction investments. Okay, there's going to be four stocks and another investments that I'm betting big on for the next 10 years, right? Stocks that while we might still trade in and out on the shorter term in some of these cyclical shifts or these sector shifts and things like that, stocks that you can hold for the next decade or longer and really have that confidence that they're going to play out for you. So I want to get to that, and then we'll have our question and answer after that. So if you've got any questions there, then be sure to ask it in the chat. Before we get started, though, I want to personally invite everyone to get the daily Bowtie. It's our daily market newsletter, absolutely free. It's just something I like to do for everyone out there in the community. It goes out daily, 9 p.m. Eastern, the night before the market opens. So anytime the market opens, it goes out the night before. Gives you that those news, all the trends, everything I'm watching for the day before and that week. So again, look for the link. I've pinned it there in the chat, and I'll have it in the video description below. Check that out. Again, it's always going to be free, and really just helps you find those trends and shifts in the market that we watch on the channel. But let's get started here. If you didn't see last week's video, we had a Bitcoin tax strategy that I'm really happy I found, because one of the big things about Bitcoin lately is, even for the longer term investors, you're still worried that the price is going to come down. I've got my long term Bitcoin price estimates 94,000 to 190,000 over the next few years, but that doesn't mean it's not going to be volatile here in the short term and could fall even further from where it's at now. But found this tax strategy, this investing strategy from an article on CNBC, and shared that in a video Wednesday. Excellent idea. So if you're investing in Bitcoin or thinking about it, check out that video. This week coming up, we've got a video on Wednesday about the safest monthly dividend stocks. We've been doing a lot of monthly dividend stock videos lately, just kind of trying to figure out that segment of the market, how to analyze those and how to find the best. We've done highest return, highest yield, things like that. But I wanted to show one video kind of ranking those on the safest, the highest risk-adjusted returns. And it was really interesting how this came out. So I'm going to bring that to you on Wednesday. And Friday, we've got a video coming comparing cheap stocks, low price stocks with high price stocks. And I think, how that comes out is really going to surprise you. But let's get to this, because this is something, like I said, I've been wanting to share for a while. We do a lot of those shorter term trends and those market shifts on the channel. but these are the stocks, the investments that I think you can, obviously have a hell of a lot less stress with. Just the highest conviction stocks that are going to do well over the next decade. And it's because there are so many trading ideas and investing ideas. I mean, you get a new stock idea every day if you're watching CNBC or YouTube or any of those, right? And it's really easy to lose track of why you're investing in the first place, right? You're trying to trade in and out of all these ideas, and really the goal for most investors, the goal is that long-term portfolio growth. So being able to focus on just these few high conviction investments really takes the stress out of that. And these are really going to be the best returns, I think, because you can invest alongside those biggest forces and the trends, right? So I wanted to start here, wanted to kind of count down these 5 high conviction investments. Okay, and we're going to get started with CRM. And now a lot of you in the nation out there, you're going to recognize a lot of these because I do talk a lot about these stocks. They are my highest conviction stocks, the stocks that I think are going to ride the most of those big trends, those big ideas out in the next decade or longer. And Salesforce.com is a great one. That's Salesforce.com, ticker CRM, is really a pioneer in that software as a service model, right? Being able to deliver, software as a service, as a continuing recurring services to companies, and really revolutionize the customer relationship management. And this was, all the way back a decade or longer ago. And while it's still that clear leader in the CRM software, it's really expanded out into a conglomerate of cloud-based solutions in marketing, data analytics, and a lot of the biggest trends that we're looking at. Artificial intelligence, remote work with its acquisition of Slack, blockchain with digitization, and even that further shift into cloud services. That's really where Salesforce is touching all of those big trends that we're seeing. It's got its Einstein AI software in artificial intelligence, really gives businesses dynamic pricing, profit optimization, really a lot of stuff that really is going to optimize their marketing and human resources. Through also in AI data analytics, which is a huge trend right now. Its 2019 Tableau software acquisition gives it kind of a remote messaging predictive software, as well as the remote work software that it's getting with Slack when it closes that acquisition. Mark Benioff, a CEO there, has always been a big believer in blockchain, digitization. And while we don't talk about that quite so much yet, all the news is on either Bitcoin, institutional investing in that, the use of Ethereum for NFTs and some of those other app developments and stuff. I think the next stage of the blockchain is really going to be applying it to business processes, really being able to for businesses to use the blockchain all across their companies, right? So I think blockchain and the use of that technology in business development is going to touch everything. It's going to touch healthcare, IT, finance. It's really already moved into a lot of these industries, and Salesforce is really on the cutting edge of that, being able to develop the tools for those companies. Management is estimating a total addressable market of all this of over $175 billion by 2025. And is booking, upwards of 30% sales growth a year. So just amazing sales growth. It's not quite as expensive as a lot of the other high growth, faster growing tech companies that we're looking at. So I really like this one. It's about 8 times on a price to sales basis, whereas a lot of those other tech names, those high growth names, are going to be 10, 20 times on a price to sales basis. And you're going to notice in these 5 high conviction investments, these stocks, the stocks that I'm watching, they're not necessarily the high growth 10x stocks that you see out in the news and articles and all that, the sexy stocks, right, if you will, the the Teladoc, the Zoom Communications, all those. And there's a reason for that. I still own a lot of those tech growth stocks that worked so well over the last year. I own Teladoc. I own TU. I own Invitae, as well as CRISPR, a lot of those, revolutionary, disruptive companies. I like those companies. I own them, but they're not my high conviction stocks, right? Because when I talk about high conviction stocks, I'm talking about the stocks that are going to produce that double digit return. Might not be a 10x return over the next 10 years, but it'll be a high double digit return over that time, and it's going to be beating the market returns, I think. So these are the stress-free, high conviction names that I really like. Next here is PayPal, ticker PYPL. Really the first mover advantage in that online commerce, digital payments field, and it's really used that to build up and scale into other products and services. As e-commerce continues to chip away at traditional retail sales, it's gonna keep on benefiting on the fees that it collects there. But it's also in a lot of these other disruptive trends that we're seeing develop over the next right now and then over the next 10 years. It's been an early adopter of the blockchain technology, as well as Bitcoin and payments there. It's also got inroads into virtual worlds, the shift to digital wallets. So all you out there in the nation, you've seen we did a digital wallets video about 3 months ago. Right now, it's been a while, but kind of focusing on some of the ARK Invest research into these big trends, and one of them was that digital wallets. PayPal right now has about 70 million users on its Venmo app, right? That digital wallet, digital payments app there. And if you look at the actual pricing on this, what the valuation of those users is to the entire company, it's only about maybe about a 20th of the stock. Okay, the stock has about a $320 billion market cap right now. I think the market is valuing each of those Venmo users at around $250 each. Well, if you look at the research, though, and what ARK estimates, that each digital wallet user could be worth as much as $20,000. And a lot of that is just the ability for the platform to cross-sell different products and things to those customers, right? So if you've got a digital wallet customer, basically just like an online banking customer, right? These are online banking customers in the Venmo app for PayPal, and basically what ARK is saying is that to each of these customers, it can then cross-sell insurance, credit, brokerage, all of these other all these other financial services and things, right? PayPal, we don't necessarily think of PayPal as a banking and financial services company just yet. It's basically just that e-commerce digital payments. But the potential there in those 70 million Venmo users, and that's growing tens of millions of users all the time. And the potential is there for it to become that broader financial services company and cross-sell all those into those users, as well as just general retail advertising, advertising space and that kind of thing to those customers. So that's how ARK comes out to that 20,000 per user, even if it's only 10,000 per user, right? That would be 40 times the current valuation on those on that Venmo segment for PayPal, and really basically tripling the stock price, right? Now, I'm not saying this is something that happens overnight, over the next couple of years even, but definitely over the next 10 years, we're really going to see that digital wallets, that online banking, digital payments segment really evolve into that broader financial services idea. And PayPal, Square's pretty far along in that too, but I'd say PayPal is really the leader in those digital wallets with that Venmo service, and it's going to be able to use that into to transform that. So it's trading for about 12 times on a price to expected sales, 2021 sales basis. So a little bit more expensive than CRM there, but still definitely a good deal considering that longer term outlook. Okay, next one here, Alphabet, ticker GOOG, Google, better known as. It's best known for obviously its 80% control of the online search market and really the growing YouTube platform, right? But it also leads in a lot of these other developing disruptive technologies that I think are not priced into the shares yet. Big news last week was the House of Representatives proposing a bill with several measures to kind of limit the power or break up a lot of these tech companies, obviously focusing specifically on the FANGs, Facebook, Apple, Google, Amazon, really targeting the power in those. And I think there could actually be some upside for investors in that. It's a pretty long shot kind of bill. Whether that's ever going to get traction, even if it does, it'll be a year plus before we see any kind of a breakup or anything like that on these companies. But even if that does happen, I think there's some real potential here, especially for Alphabet, because it does have all these side projects that I do not think are priced into it just yet. So if you think of if you do a sum of parts valuation for Alphabet, right? Then you find that actually the share price is actually just valued on that online the Google, the search, right? The search advertising and the YouTube advertising dollars that it makes. But then it also has these other bets, right? And it actually calls it other bets on the in the financial statements. And those are things like its Waymo unit for autonomous driving, AI, drone technology, healthcare. It's got a huge healthcare disruptive technology healthcare segment. And all of these are those moonshot investments that it has that is just not priced into the stock right now. The autonomous driving, self-driving, and that kind of thing could be huge, could be as big as the company is right now itself over the next few years as those self-driving taxis become a reliable source of transportation. So I really like this one. The Waymo platform, not only for passenger ride hailing, it's already at level 4 driverless service in Phoenix, as well as a fleet of 300 plus vehicles. It's limited to kind of a 50 square mile area around Phoenix right now, but they're obviously expanding or planning on expanding out to 11 cities and then nationwide after that. They've got the Waymo Via for commercial freight, which is also going to be huge. That life services unit, Verily, is kind of the healthcare area. So I mean, this is just one of those companies that, along with Amazon, that you think it's going to rule the world in 10 years. It's going to basically own the world. And of course, with that House bill and governments, they're not going to let that happen. They're going to break it apart. But for all of you old timers like myself that were around for the breakup of AT&T back in 1984, so 1984, government came in and said, AT&T, you're just way too big. You own pretty much the entire nation telecom services. So we're going to break you up, make you break up into the baby bells, what they called them. It was like One West and all those different telephone companies. And it ended up being a really good investment for the people that got shares in all of those companies when it broke off from AT&T. It was 1984. Within less than 20 years, that was basically a 4x times on your investment, which was a really great return at that period. And I think we'll see that same kind of a return if Alphabet gets broken up into into the search, into maybe YouTube even, as well as some of these other bet companies that will play out. And the price is great on this. 3.3 times on a price to expected sales basis this year. So less than half the price of some of those other stocks that I follow, CRM and PayPal. So a very good price at this point. The next stock here that I want to cover is Zscaler. And again, a lot of you in the nation have heard me talk about this one before. I love that trend to cybersecurity. Obviously, with the shutdown of the of the pipelines last month, we've had a shutdown of JBS, the basically the world's largest largest meat processor last month. This is one of the biggest trends, one of the most high confidence trends out there, right? We need some kind of a software or security solution for these companies to avoid getting hacked and having to pay out $11 billion to the hackers. And why I like Zscaler, it's really shifted the market, the entire market for that cybersecurity into kind of a cloud delivered product, right? The old legacy providers used to provide cybersecurity strictly through hardware, on-site hardware for companies. Zscaler really pioneered that shift into cloud delivered security, and it's really helped it take market share away from some of the more established players. Companies growing sales by 48% a year, 48% in the most recent quarter. So high double-digit growth. This is actually one of the smaller companies in the list there that I cover. and it's actually surprisingly profitable for one of those small cap companies. Shares are trading at obviously a higher price to sales multiple, right around 35 times on a price to sales multiple. So quite a bit more expensive relative to those other stocks that I talked about. But that trend to cybersecurity is definitely one that we're going to see play out. And I think this is one of those higher growth stocks that I still am highly confident that it's going to do really well. So that's four of the stocks, the stocks for my high confidence plays there. Next is really the biggest, highest confidence play I've got, and it's going to be in cryptocurrencies. All you out there in the nation, haven't always been a big fan of cryptocurrencies or Bitcoin or anything like that. Actually did a few videos in 2018. Right around the time when Bitcoin was crashing down to about $4,000, $5,000 a Bitcoin. At one point in 2018, showing you stocks to invest in instead of Bitcoin. Stocks like Nvidia that would get that upside to cryptocurrencies, but not necessarily the volatility and that kind of thing in crypto. And a lot of the reasoning was I just couldn't wrap my head around the valuation of Bitcoin or some of these other cryptocurrencies. Something I can't value. I can't figure out a reliable estimate of a future value on it, then I'm not going to recommend it, and I'm not going to invest in it myself. Okay. What changed was really just kind of the evolution of that market, and the fact that one of the facts is that if an 80% decline from that 2017 peak, right? Bitcoin peaked at about 19,000 in December 2017, fell about 80% over the next little bit more than a year, about year and a half or so, fell 80% to its lows, and yet was able to rebound, hit new highs around $64,000 this year. It's since come back from that. But the fact that didn't completely destroy this as an investment, as an asset class, people still came into it. We're actually seeing higher institutional adoption, institutional money manager adoption, as well as balance sheet cash from corporations, higher adoption on that. So the fact that 80% crash in the value of Bitcoin in 2018 didn't destroy that case, that investment case, tells me nothing will. Okay, we're about half down from the highs this year. Bitcoin is about 36,000, 35,000 right now. It's about 50% down from the peak in February. And everybody's, again, wondering if it's ever going to come back up again, if it's worthless or that kind of thing. And I would just say, look at history. If it didn't come down, if it didn't destroy the investment case then it's not going to do it now. It's not going to destroy that investment case. So eventually we're going to see more institutional investors come in. We're going to see more high net worth and money managing come in, as well as the corporate cash. And that's going to build it up quite a bit. Another one of the reasons is I finally kind of wrapped my head around a way to value Bitcoin and an investment analysis around it, around just the institutional investing, the corporate cash, as well as using that that formula, that Metcalfe's law, as far as valuing Bitcoin for based on its network effects, right? So if you didn't see that video, I've actually got it linked in the description below, a video where I analyze the price of Bitcoin as well as some of the other cryptocurrencies. Why right now, and why this really moves into one of my highest confidence investments, right? Is one, we're starting to see countries, adopt Bitcoin as legal tender. Okay, and that is a huge vote of confidence into using Bitcoin as that payment value and that value of payments. El Salvador just announced last week, I believe it was, that they're adopting Bitcoin as its legal tender. Not a big country. I think it's like $22 billion GDP, so a very small country. But it's a base case, or it's a case use of Bitcoin as as legal tender and for more than just an investment, right? When we'll see how it works in El Salvador, but I think a lot of Latin America, a lot of these other countries are going to adopt this kind of idea. And it's because a lot of their inflows are from those remittances, right? A lot of people living, a lot of expats of El Salvador living outside the country and sending money back in. They're paying fees as high as 5-10% on that money. So adopting it as some kind of a legal tender, then they can obviously save billions of dollars on those fees. And we will start seeing that used more often. Another one, these we actually heard last week that Coinbase has teamed up with 401k provider For Us All. It's a small 401k provider. I think it's maybe 25 billion dollars in assets under management compared to the I think $22 trillion 401k market in the U.S. alone, right? So again, a very small step, but it is a step, and it is a case study that can be used by other companies, other providers in the future. So basically, 401k provider For Us All working with Coinbase to allow its retirement savers, everyone in those 401ks. It manages or it provides 401k services for about 389 companies, something like that. And basically now anyone in those, anyone working at those 389 companies can invest up to 5% of their 401k money into Bitcoin or into cryptocurrencies, right? Again, very small case study, but it is a case study nonetheless. And I think that's the trend that we're going to see. We're going to see other 401k providers adopt this. We're going to see other institutional money managers allowing their clients to invest in this. And when I did that evaluation of Bitcoin and looked at the investment value according to the institutional cases, according to the corporate cash, I mean, just a 1%. A 1% allocation in 401ks becomes a $40,000 bump to the price of Bitcoin, right? 1%. That's not even, I think for this for us all, it was 5% max, right? Even if just 1% of 401ks get put into cryptocurrencies, that's a $40 bump to the price of Bitcoin. If for institutional investors, a 1% bump, and that's institutional investors, high net worth, money managers, a 1% bump is another $100,000 on the price of Bitcoin, right? And so I think as we see this trend develop, into allowing Bitcoin to be used or cryptocurrencies to be invested in these different products, then you start seeing that unfold. And 1% is kind of a minimum of what you would expect, right? You would expect more like 5% or even more. But just that 1% use by 401ks and institutional investors gets you to 140,000 plus, about 40,000, up to about $180,000 on the value of Bitcoin, right? Another thing we saw last week that really raised my confidence level in cryptocurrencies was the Basel recommendation, right? Now the Basel financial or Basel banking group is basically all the major central bankers and banking regulators around the world that get together. They decide kind of what their financial or what their recommendations are going to be for banking regulations, right? And so it's not something countries have to adopt, but a lot of these larger developed countries, they adopt these standards and these ideas. Well, Basel last week said that Bitcoin, it can be held in banking, in banking reserves. Banks can hold it on their balance sheet as a reserve, as a currency, but they have to hold it. They have to hold the entire reserve in cash or in that currency, right? So what if you don't understand, the banking system is basically built on a fractional reserve system, right? A bank can have $100 in assets, and the bank's assets are just deposits, right? Whatever money people put into that bank, that's its assets, that's its deposits. Well, it only has to keep maybe $10 of that actually in the bank. It can loan out $90 of that to loans, to make money on that money, right? It only has to keep a certain amount, a very small fractional amount in the bank to so when people want to take money out and that kind of thing. And that's regular cash though. That's legal tender, right? So Basel said that for Bitcoin, for cryptocurrencies, yes, they can hold it, but they have to keep the entire amount, right? They can't be leveraging that amount of assets with loans and that kind of thing, which is kind of strict. Obviously, if a bank only has to keep maybe 5 or 10% of its legal tender of its cash account on reserve, then it's pretty strict to say that they have to keep 100% of any cryptocurrency reserves on hold, right? So it's strict, but it just solidifies those regulations and those standards, right? Everybody right now is worried about how regulations are going to come down on cryptocurrencies. If the government says, okay, we're going to regulate it, we're going to put all these standards on it and all that kind of thing, what's that going to do to cryptocurrencies? And I say bring it on, because any kind of formalization, any kind of regulation that actually legitimizes cryptocurrencies, it's going to take it higher. It's going to give institutional investors, money managers, it's going to give corporate CFOs, the financial officers, it's going to give all of them more confidence to be able to hold cryptocurrencies, to invest in cryptocurrencies for their customers, as well as hold it in corporate cash. So, any kind of news that we get for more regulation and more standards on Bitcoin and cryptocurrencies, that's a good thing. So really, with all this together, cryptocurrency, and I know for a lot of you out there, it still sounds like a kind of a worthless investment, a really high risk gamble, to invest in cryptocurrencies. But I got to tell you, given all these factors, and especially a lot of the stuff that we've heard, seen play out over the last month, over the last couple of months, it is probably my highest confidence investment. All you out there in the nation, I'm investing in Bitcoin and Ethereum. I'm not going so far down into a lot of these other tokens, even Dogecoin, which I know it's made a lot of money for a lot of people out there, but really, if you're investing on those fundamentals, on that future use case of Bitcoin or of cryptocurrencies, then you're probably investing in Bitcoin and Ethereum. Okay. So those are really my 5 highest confidence investments, highest confidence stocks, as well as the investments there, the ones that no, they're not going to set the world on fire, but they are going to take advantage of those biggest trends that we're seeing over the next decade. I think it's going to be market beating returns, double-digit returns, definitely, easily, and you're going to be happy with those. So now I want to turn it over to the Q&A, and I'll scroll up here.